please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me is just Surabhi. We are missing Anuj today. Well, the markets are actually missing a lot of cheer. If you looked at the global celebration, it's considerable. If you even read the Fed minutes, the certainty with which the markets can now look forward to a rate hike because the Fed is smelling that the recovery underway is fairly strong. So global recovery, global growth is something which should have been a tailwind for Indian markets. But what we saw yesterday, post-noon, was that there is definitely a fear of heights. After above 10,000, the Nifty is not able to hold, and a particular pain point are the banking stocks. I'm not surprised. I always was worried when PSU banks were rising or corporate lenders were rising. The market, perhaps after the two big results, two small results, LVB and South Indian Bank realizes that provisioning is going to be a pain. I do not know, but the Nifty Bank simply doesn't let the rest of the market climb. Hi, Surabhi.
Good morning, Lata. As you said, I think the concern seems to be that none of the positive global cues that we've been getting, the all-time highs in the US market, or the fact that oil prices are largely range-bound, they're not breaking that range. None of that seems to be really helping us. For what it's worth, the SGX Nifty is holding on to a little bit of green as of now. So you've got a mild, about a 30-point uptake, but as we saw yesterday, global cues amounted to nothing. The market could not get back towards that 10,000 level, and there was a fair amount of selling on fair amount of volume as well. So that's not something that can be wished away. But I want to come back to the Nifty Bank, Lata, and the problem point for the market. Some of these concerns around NPA issues. I don't know if the concern is also sort of extending to what happens to the way the bond market reacts, whether there will be a fiscal stimulus, additional borrowing or not. We didn't get much from the Prime Minister's Economic Advisory Council yesterday because it was the first meeting. But what's the sense on the macros now?
Well, just a word on the PMEAC. As you said, because it was the first meeting, all we got were 10 areas of interest. And if you looked at those focus areas, it can mean all things to all men. They were motherhood, areas, agriculture, fisc, animal husbandry, monetary policy, the works. You could not really say what the PMEAC might say, but at least it was good that, the government thought the finance minister needs more advice, the prime minister needs more advice, and therefore this expert body is there. I was only intrigued by the fact that they said they will look at a combination of fiscal and monetary steps as well. They did not sound extremely loose in their, statement that, okay, we will ask for monetary looseness or fiscal looseness. On the contrary, they said we will work with the RBI. So we should not run away with anything. I don't see any impact of that. But I do see an impact of the direct tax growth number. That came in later, and that is the April session. Was expected that more people would have pulled their money into the formal system, and therefore they will be forced to pay tax. Now, it looks like it must be that others have paid so much less tax that in spite of that buoyancy, the slowdown has eaten away. And why is inline numbers bad? It is bad because we know that there is no revenue coming from the Reserve Bank to the extent was expected. So that's about, 0.2% of the GDP taken away, 30,000 crores less dividend. We know that spectrum fees have been extended out, and that's about 0.1% of the GDP less in revenues. We know that the government has anyway taken out cesses and other charges because all those have to come into the GST. That was a loss of about 0.5% of GDP in terms of revenues. The expectation was that all this will be made up by the direct tax revenues, which should have a demonetization tailwind.
I did see one number. There was a 30% growth in the income tax. I don't know if that was personal income tax.
You're right. You're absolutely right. That was advance corporate tax, advance income tax.
Income tax,
Advance tax, I have asked a cross-section of economists and fiscal experts. Advance tax is extremely volatile, so they don't normally come to a conclusion on the basis of advance tax. The direct tax number is a very good number. So that, if you work with that, you're getting in line with estimates, direct tax. So there is a bit of a worry that the fiscal gap will be there anyway even without a stimulus.
Well, there's the ONGC HPCL deal, so maybe that'll add some much-needed cash to the government's
could bring something.
Yeah.
But the fiscal gap worry is still there in the market.
Okay, on that note, let's quickly run you through what our wise experts have to say going into trade this morning. Gautam Dugad of Motilal Oswal says, as they prepare estimates for the second quarter of the current fiscal, he can't help but notice a slight moderation in the Indian macro story. Weaker than expected GDP growth for the first quarter FY18, higher crude prices, and some teething troubles pertaining to GST implementation. That said, he believes that the worst is behind as far as GDP growth is concerned. He says post-GST restocking and an early festive season should help the second quarter performance of India Inc. He expects the Motilal Oswal universe profit after tax to grow at 23.4%, but just 4% if you exclude OMCs, PSU banks and metals. He says growth will be led by cyclicals like metals, PSU banks, OMCs, while defensives are expected to post the fourth consecutive quarter of profit decline, dragged by IT and healthcare. He maintains their FY18, FY19 Nifty EPS estimates at 487 rupees and 602 rupees respectively, and introduces their FY20 Nifty EPS estimate at 693. He's expecting the Nifty EPS to grow 15% in FY18 and 24% in FY19.
Okay, that looks very good. 15 in FY18, he said.
FY18, yeah.
Okay, so it's very
and 24
strong.
in FY19 if it happens.
Yeah, that's far away. But 18, I thought most people had whittled down their expectations to maybe 10% at best. So we'll have to wait and see whether it was only the Motilal Oswal universe. Let's get you some money market views as well. Mohan Shenoy of Kotak Mahindra Bank says the US FOMC minutes look to confirm a December rate hike, while terming below target inflation as transitory. He says the dollar remains range-bound against majors, and he expects the USD-INR pair also to be range-bound within a trading range of 65 to 65.30 today.
Mohan Shenoy says the bond market is subdued ahead of the release of CPI inflation data later today. He says continued supply of OMO sale and scheduled auction tomorrow should deter a building of positions in the GSEC market. He expects the 10-year benchmark yield to trade in a range of 6.72 to 6.76% for the day.
Okay, that's money and bond markets. And now for the world view, Nigel standing by.
Well, supportive global cues is what we are seeing. The U.S. markets continue to end at record highs. All those three indices, in fact, they ended at record highs. The big headline really overnight was the Fed minutes signaling that there's a possibility that come December, yes, we'll see another rate hike. That was really taken positively. And in fact, we did have all the U.S. markets end with good gains. In terms of gainers from the Dow, you had Johnson & Johnson that did very, very well, Walmart as well as McDonald's. All those three, they were the top gainers. Well, when the Fed has signaled that they're going to be hiking rates in December, you'll expect some strength in the dollar. That wasn't really to be, because that, in fact, hit a two-week low. So just keep a lookout on that front. A lot of quarterly numbers expected. Well, we had BlackRock as well as Delta Airlines. Both of them came out with their set of numbers. Both of them beat estimates, but a lot of other large names will be coming out with their set of numbers. European markets, they ended more or less mixed or as flat as can be. Their attention continues to be on the political landscape of them. And in fact, investors, they are monitoring what's going on there. The IBEX should be up for you on the screen. Well, we had commentary coming in from the Catalan leaders. They said that they've suspended their move to call for independence. So that was good news. In terms of peripheral indices, it was more or less mixed. Italian index doing well. The ATHEX did see some selling pressure. The Asian markets, though, early this morning, they have opened up well in the green. The Shanghai market is as flat as can be, but the Japanese index, that is at a decade high. So just keep an eye out on that one. And the SGX Nifty is indicating after yesterday's sharp slide, maybe in fact 35-point bump up just to kickstart trade. Back to y'all.
All right, Nigel, thank you so much for that. So the world's a happy place. Of course, it didn't really help our case yesterday. Let's get some more opinion on this then. We have Jeffrey Dennis, Head Global Emerging Market Strategy at UBS, joining us now on the phone line for a quick chat. Thank you so much for taking our call this morning, Jeffrey. As an emerging market strategist, how are you looking at these record highs that the mother market is making, the US market itself, the kind of growth numbers that we're getting there? Are you expecting an overall disenchantment for emerging markets then?
We're obviously not at all-time highs in emerging markets. Clearly we are in the U.S., and I think that reflects the fact that over many years, series of years until early 2016, of course, developed markets beat emerging markets quite dramatically, and I still think there's a lot of catch-up potential for the emerging markets over DM over the next couple of years or so. Now, what's propelling all of this is, of course, there's clearly corporate earnings growth has been good around the world, including in the U.S., including in emerging markets, to be fair, over the last 3 or 4 quarters or so. But also what's really been helping tremendously is the very, very low cost of capital. So even though the Fed is looking like it wants to move again in terms of interest rates in December, long-term bond yields are relatively low, and that's what's creating, I think, this very favorable environment for equities. It just means the valuation metrics that look stretched don't look particularly stretched when you factor in the cost of capital.
Fair point. Good evening, Jeff, and thank you very much for staying up for us.
Hello.
What's your sense about India itself? We haven't quite been the recipient of FII funds, foreign funds. I mean, what's the worry point in India for foreign funds?
Well, I think India's in a slightly difficult situation at the moment. I mean, we've still got an overweight there because we think it's a long-term structural overweight. But there's no doubt in the short term there's a couple of things, I think, which are concerning investors. One is, of course, you've seen a series of earnings downgrades. I mean, we're seeing in the emerging markets generally more earnings upgrades for calendar 2017, whereas we've been consistently saying we think the Indian numbers are being too high, and you have therefore seen some downgrades over the last several months. And of course, as your listeners will know very well, we had this very unexpectedly weak GDP number for the first quarter of the fiscal year. On the back of that, our economists cut their growth forecast back to 6.6% for this fiscal year, fiscal 18. So it becomes a question of, is this sort of a one-off? Are we in a temporary blip down in terms of growth because of all the things that have gone on in India? The demonetization process, of course, 3 quarters ago, the impact of the goods and services tax introduction, or is this more of a trend slowdown? We tend to think it's a blip down, and if it is a blip down, I think the market will continue to do well over the long term. But frankly, that's what the challenge is at the moment, and there's a certain amount of uncertainty about it for all sorts of obvious reasons.
Okay. Well, just another word on what you and my colleague were discussing just a moment ago. The global recovery, the good corporate numbers, and now imminent rate hike by the Fed. You don't see anything destabilizing? You think that this positive recovery and the low rates scenario, this Goldilocks scenario, is likely to continue?
Yes, we broadly do. I mean, clearly there's risks here. I think the reason you didn't get any sort of reaction to the FOMC minutes today is because we've got to the point the markets where the markets are pretty sure 70–80% possibility that the Fed is going to move rates in December. I don't think that prospect changed materially with the FOMC minutes. We still think they seem to be on track unless there's some surprise on the negative side with inflation, for example. Now, we think the Fed raises rates twice more. That could be a modest challenge for markets. But the real key, as far as we're concerned, is we think long rates end the year at 2.4. They're currently 2.35, so they're hardly any change. We think they go up a little bit more to 2.65 by the end of next year. But that's not the sort of move, in our opinion, that's really going to put emerging markets and risky assets under a tremendous amount of pressure. But the risk is obvious. Higher inflation in the U.S., a more aggressive Fed, higher bond yields, and then it will be very different. So we're watching bond yields very closely.
So, Jeffrey, you said in terms of a long-term stance, you still like the India story. Do you expect a return of foreign flows? Because we've just seen consistent outflows for a while. Or are there better sort of competing emerging markets vying for that capital? And also, what do you like in India?
I think you're going to find, in fact, that it is going to take a little bit of time before that foreign money comes back. And I think that's for 2 reasons. Number one, because you do have this uncertainty about the growth picture in India. Are we just, as I said, having a temporary slowdown, or is this more significant? And at the same time, the Indian market's done very well this year, of course, very well indeed, although it started to slow down recently. And it's had a lot of competition with that, in particular the technology sector in Korea, Taiwan, and, of course, in particular particular in China, and India, which has been a major consistent overweight of global and gems investors for quite some time. Well, all that's happening now is they're trimming those overweights in India. At the same time, they're building up their underweights or getting less underweight in China. And I think that rotation from India to China could go on for a while until such time as you see, the technology sector slowing down.
Okay. Oh, yes, we should remember that technology story. The first of them will be coming out with their numbers tomorrow. Thank you very much, Jeffrey Dennis, for speaking with us. So, the global backdrop is intact for most emerging markets, despite the Fed raising rates. But India, not yet a beneficiary, seen as a lower growth delta.
It's still 6.7% growth. Sometimes you sit back and think it is among the best in the world.
When you bought the shares last year, you expected 7.3.
Yeah.
And now you're getting 6.7. So it's all about delta in global markets, not the absolute number. All right, speaking about Indian markets and the Indian GDP story, Finance Minister Arun Jaitley is on a week-long visit to the United States. And in a huge CNBC TV18 exclusive, Malvika Jain has caught up with him. She began by asking him how he perceives the Indian economy in the context of the recent IMF projections and, as well, the growth challenges going ahead.
Well, obviously, everybody wants faster growth. And as somebody in charge of that department, we want faster growth. There is a challenge. And it would be absolutely incorrect for anybody to interpret a challenge to the economic situation as some kind of a crisis.
Sure.
Obviously, the economy is doing reasonably well. We can do much better. Important structural changes can have a transient impact, which they've had, but all indications are that things are improving and will improve. After implementing GST, it's such a major transformational changes that you review the market situation day to day. Now, two very important decisions which we took in the last meeting are with regard to exporters, because they are certainly entitled to quicker refunds. You can't block their capital. And secondly, you had to reduce the compliance burden on the small and the medium scale. To incentivize people to get into the GST net, you had to offer an attractive composition scheme. That's what we've done. We followed the principle of equivalence. The pre-existing taxes, we put them in the closest bracket. And then suddenly you realize that the pre-existing situation was an absurd situation. And already over 130 or 140 commodities and many services, we've brought them down from the 28% category to 18 or 12.
Okay, that exclusive conversation is going to be available to you throughout the day on CNBC TV18. That was just the trailer. The full show is in a few minutes.
All right, on that note, we take a quick break. On the other side, we'll come back with the CNBC TV18 list of top 10 stocks for this morning.
वीडियो गेम है क्या? Investing is a serious business.
In terms of the bottom line, a growth of around 4% to come at around 6,183 crores. Now, in terms of the other income, that will be a bit lower because remember they did a 16,000 crore buyback, and that's why the PAT growth is a bit limited. In terms of the constant currency revenue growth, we are looking at a number of 1.5 to 2%. Last quarter as well, they did around 2%. Dollar revenue is expected to jump by around 3%. In terms of the tailwind, yes, the currency movement is a bit favorable. Expect a 80 to 130 basis point impact of that. But in terms of headwinds, we have the lack of recovery of growth that we are seeing in the BFSI and retail sector. And also analysts want to know whether the recovery that we're seeing in telecom and healthcare can be deemed sustainable or not. In terms of the margins, they are expected to improve. In terms of the commentary to watch out for, of course, the street will be watching out for what they say on the BFSI and retail segment, because during the quarter we had a note from Nomura saying that the management is saying that it got pushed to FY19. We'll wait by to hear the management commentary on that. Last quarter, they did mention that their large insurance deal is in the pipeline, expected to get done in Q2. We'll wait by and see whether that has materialized or not. Outlook on margins is also fairly important because remember they had their guided band of 26 to 28% in terms of constant currency margins. Quarter 1 was weak. Quarter 2 is expected to be around 24.5. If there is any change in the guidance, that will also be keenly watched out for. Back to you.
Okay, all right, Anisha, thank you for that. And obviously, those numbers start flowing in this evening, all the analysis, and of course, a word from the management. All the action starts at around 5 p.m. this evening. It's not just TCS. From the banking pack, it's going to be the turn of index member IndusInd Bank to report numbers as well. Abhishek, what are you expecting?
Well, Surabhi, first, the exclusivity period that they had with Bharat Financial ended yesterday, and IndusInd came out with a press release wherein they have mentioned that the board of directors will consider on Saturday the strategic acquisition as well as, warrants to promoters by way of preferential issue. So, most likely the deal will be done on Saturday with respect to Bharat Financial, and we'll wait for that. Coming on to what to watch for the earnings season, loan growth about 25% will be very positive. Remember that, last 2 months, CV sales have been pretty strong. After the implementation of GST, CV sales have been 25% plus. So that forms substantial portion of the book of IndusInd Bank, and that is a high-yielding product. So net interest margin above 3.8% will be positive. 4% is what they have been recording in the previous few quarters. Asset quality largely expected to remain stable. Only we saw slight hiccup in the previous quarter, but largely under control. Credit cost on a quarterly basis below 20 basis point will be very positive. Our poll suggests an NII growth of 26.5%. If you look at the last 6 to 8 quarters, they have grown the NII above 30%, while profit is expected to grow at 25.5%. If you look at the historical numbers, the net profit has grown anywhere between 25 to 30%. Back to you.
Okay, so this should of course set the tone a bit even on banks. One of those banks which should always come with a standout performance, but I guess people will want to quiz Romesh Sopti more at 1:45 p.m. on the Bharat Financial issue rather than the results itself. The results are normally above par.
Okay. Well, on that note, let's quickly recap our top 10 list of stocks this morning. Stocks expected to gain are Sun Pharma, Spark, TCS, IndusInd Bank, Indiabulls Real Estate, Majesco, Kaveri Seeds and Lupin. Stocks expected to be under pressure are NMDC, State Bank of India, BOB, PNB, in fact, the entire clutch of PSU banks. Let's see if they can recover from the slide that we saw yesterday.
All right, now we have to shift back to the stock of the morning. That's most likely to be Sun Pharma because the company gets a breather, a sign of relief after the US Drug Authority closed the inspection of its Dadra facility, giving them a clean chit. Amay Chalke, the research analyst of drug companies at HDFC Securities, joins us on the phone line. Amay, how big was this Dadra worry and how much can the stock react today?
So it is sentimentally positive, but in terms of financial changes, we have not done any changes in our estimates because the many key product approvals are stuck in Halol facility rather than the Dadra facility. And if you see the existing contribution of Dadra on the top line, it should not be more than 7-8% on the top line of US. So it will lead to like 4% of the top line of the whole Sun Pharma basically sales. So obviously, so the contribution is not much from Dadra facility for the US market at this point of time. So we will wait. Obviously, it is a positive trend that their facility is getting clear. And I hope the Halol facility will also, the warning letter will be lifted once the re-inspection happens.
So, Amey, as you said that, okay, Dadra's, the cloud over Dadra is out, which is good news, but doesn't really move the needle in terms of, I guess, EPS and therefore stock price estimates. The stock has rallied already quite a bit from the lows of around, I think, 450. What next? Beyond Halol, is there anything else that can justify this rally? I mean, Halol is a bit of a hope trade right now. At some point, we should get good news from there, right?
Yes. So we are expecting Halol re-inspection to happen at least 3 months down the line. And then there would be at least 4 months period for a warning letter to get lifted, basically. So operationally, you will see the improvement in the performance only in FY19 and not in FY18. So because approvals will only start coming in April, May of 2018, which is the next financial year, if everything goes well.
What's your current target on the stock? What's your rating and target as of now?
So we are we have the neutral rating on the stock. So we had downgraded the stock 2 quarters back.
Okay.
And we will remain neutral until we get good visibility on Halol resolution, and also if there is good outlook on the specialty part of the business during the call.
Oh, right. So that's definitely a result we'll watch out for. May, since we have you with us, a very quick question on Lupin. What kind of, EPS increase at all can this new drug bring? This Solosec, or whatever it is.
So Solosec is a specialty drug. It is novel drug basically, which they would be launching in the US market. So typically it doesn't, we don't treat similar to the generic market drug where we immediately take the EPS impact because the launch would, So the Solosec will take at least 2-year time to Lupin to ramp up their product sales in the US market, and we will watch out closely how the ramp up is happening in that product. Then we will revise our estimate.
Okay, so at the moment, no change in view on Lupin or price target or anything.
So yeah, on number there is no change, but obviously this is positive development considering that they're developing their specialty women's healthcare portfolio.
All right. Thank you very much, Amir, for joining us with your quick reaction on the 2 big pharma index stocks, Sun and Lupin. Feels good when pharma companies feel more in health.
Well, I guess there's still hope for Sun Pharma that, Halol is going to get resolved.
And now for our technical experts, Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar join us. Most important today to hear them, especially after that heart attack of a fall that we saw yesterday after 1 o'clock. Good morning to all 3 of you. Ashwini, well, you go first. That big fall, are we likely to continue to see the markets plumbing more depths, or is there support at 9950 or some level like that?
Well, good morning. And for the Nifty, I think you are likely to remain sideways, 9950, 10,050. And the point is to act only at these 2 levels. As far as the Bank Nifty is concerned, that's where, the actual sell trade could happen. And, if it gaps up along with the Nifty, that's where you go short with a stop, say, around 24,350 and look for targets of 23,800. CNXIT, I don't think there's much of a trade, but I think the Bank Nifty, if it starts opening up on the downside, that will create problems for the Nifty as well. Upper levels, 10,050, 10,070, may not be very easy to cross in the short term.
Well, the bias in the Bank Nifty, where are you biased? Is it more likely to break the downside? I'm asking you because the troubles in this quarter will come more for the corporate lenders. The Nifty Bank is more heavily weighted towards the retail private sector banks. So, is it that there are big depths that will open up in Nifty Bank, or is it that it'll be a shallow fall?
Well, while the market went up, the retail lenders, they kind of rallied. Now, at this level, market will find an excuse to sell off into the corporate lenders. And the problem is that slowly, SBI, ICICI, they are getting deeper and deeper into bearish territory. So yesterday, PSU banks of all types started falling along with ICICI Bank, and the retail lenders failed to go up. So the point here is that what could go up has probably already gone up, and what needs to go down has just about started going down. And not only that, even the NBFCs fell. So overall, there seems to be a clear underperformance in the financials, which the market is going through, and often that does not lead to great upsides on the Nifty.
Okay. So Darshan, you were warning us about this yesterday because, you were long from 9,700 onwards, but you did make that point that if someone is going to enter fresh now, then he needs to be cautious. So has that trade gotten stopped out yesterday with this fall? What does one do with their index positions now?
Yeah, hello, good morning, and thanks for remembering that. You're right, we have been long, but we got stopped out yesterday, and that's a very nice way of exiting a trade, to get hit by a trailing stop, which means we are exiting with profits. Yesterday, surprisingly, not only changed the texture of the market, it of course closed our long trade, told us that the short-term trend is no longer up. But today, the markets have opened up a different trade. This normally doesn't happen. When a trend stops, there is consolidation, there is a pause, and there is chaos and confusion. But while that may happen in the short term, a new trade has opened up in the Nifty, and that is on the short side of the market. So my suggestion is that a fresh trade could be taken as a positional trade. Buy 10,000 Nifty put options for November, not October. So we are looking at a decline that may not start now, but that should almost certainly be when we enter November through. So the next 6 to 8 weeks should see lower levels. So I'm not talking about today, tomorrow. And buy 24,000 bank Nifty options for November. This is a positional trade, so the view has changed from a short-term uptrend to a deeper retracement.
Okay. That's, I mean, if it's positional, then it's a little more scary. There is no today trade then in the Nifty?
No, for me, there is no today trade. It could be anything.
Fair enough. Okay, Mitesh, your call, Nifty today, positional?
Yeah, so good morning, Lata. I think, I have the similar view as Ashwini mentioned. I think 9940 to about 10,050, give and take 5-10 points, I think is the immediate counters. But the trade could happen in the bank Nifty instead of the Nifty. I think that's one index which clearly has been underperforming, and the fall was quite sharper. It hit the upper end of the range at 24,450, 500, declined sharply from there. And while the broader range still remains between 23,900 to about 24,500, the medium-term indicator is sliding down. So my sense is that there's an advanced warning of a breakdown. So if the bank Nifty starts to slip below yesterday's low, I think we'll start opening up short trades over there, and that could drag down the Nifty as well. But okay. Nifty I'll short only below 99.40.
What was yesterday's low? Sorry, if you have it ready right away.
Yeah. So yesterday's low was sorry, just a minute. Yeah. Yesterday's low was 24,054. So 24,050 should be your benchmark to go short.
Fair.
Okay, so then let's get down to individual stocks. Ashwini, as I come to you for your stock list for the morning, also a word on, some of the other pillars of the market that were holding it up. We were having this conversation that, how Reliance is becoming a big pillar and the Nifty is moving even beyond, even without the banks. What is the specific call on Reliance and, of course, other stocks that you are trading this morning?
Well, that's the reason the Nifty is expected to be more range bound, because there is a part of the Nifty which is doing well as well. But even Reliance, kind of range bound, 750, 850, generally has trouble getting past, the 850, 870 type of zone. So as long as the bank Nifty remains a little weak, Reliance could consolidate in this 830, 850 type of zone. Then there are gas stocks, etc. A part of the bull market will continue to be bullish. So broker dealers and all these other guys which are having their own independent rallies, they are likely to continue. But overall, the large public sector banks are making new lows. I mean, they have gotten to levels which were there at 9,700. So that is where the big pressure is likely to come in. And probably the market wants to sell off before the PSU results come in anticipation of, something.
Okay. Well, just one more word then on the Nifty Bank. It's also the weekly expiry day. So should we be prepared for anything else on account of the expiry?
See, given the kind of trend we have, expiries generally accentuate the trend. So, other than the fact that HDFC Bank in the last half an hour could do its own jig, overall, I think only more selling will come in, because the rallies, when they happened, they were like 50, 90 points a day. The fall, when it happened, it took out, 5 days worth of action in one fall. So that way, I think the downtrend will only accentuate.
All right. So let's get down to individual stocks then, gentlemen, as well. Ashwini, let's start with you. What's on the list today?
See, very safe sells, and you'll probably get a few gaps in the PSU banks, the smaller ones. Orient Bank, that's a sell with a stop of 118, target of 106. BOI is a sell with a stop of 138, target of 126. Union Bank is a sell with a stop of 129, target of 120. And couple of buys, Aarti Industries seem to be moving higher from a consolidation. That's a buy with a stop of 910, target of 945. And Century Ply is a buy with a stop of 260, target of 274.
All right. Thanks for that, Ashwini. Mitesh, what would you be trading? Are you also as negative on public sector banks? Ashwini has 3 of them.
Very much. I don't have 3 of them, but yes, I think the view is very similar. I think PSU banks are the one where the trouble looks the biggest. I have a Bank of Baroda. It's a conditional sell. I would want to see the stock break below pivot levels of 136.5. Sell then with a stop at 141. Look for a 127, 126 kind of a target. Canfin Home Finance is a sell as well. Preferred range is 25.60 to about 25.75. Slowly take short position in that range. Keep a stop at 26.25 and look for declines to about 24.50. And my third sell call is on Cummins with a stop at 912. I'll sell for targets of 845. I have 2 buy calls as well. Havells is a buy as yet. Keep a stop at 516. Look for targets of 550. And Infratel yesterday gave very good signals on the intraday charts, possibly suggesting some continuation of the up move. So that's a buy with a stop at 403.5 for targets of 428.
Okay. Sudarshan, you have more sells than buys, but not PSU banks?
No, PSU banks is something that I've been bearish on for a long time, and the Nifty Bank itself, although represented largely by the private sector, covers most banks, and that's an easy short sell. There are any number of mid-cap stocks that are now available for selling. Yesterday changed the texture of the market, and that's okay. That 10-day rally could easily be classified as just a minor up move, and maybe the intermediate downtrend is intact. So Strides is a short sell. If you see the charts, it's been making new lows. A very tepid rally just failed and fizzled yesterday. That's a short. Jet Airways is a short. A small rally was probably a bearish flag. Significantly lower levels could be coming. Siemens already Mitesh has spoken about that. Siemens is a short sell. You know, it's one of the few capital goods stocks which is making new lows consistently. Something is wrong there. There are 2 buying ideas, maybe because markets could be choppy. I have no idea about today's market. If choppy markets exist, then HCL Tech is a buy. The stock is an outperformer. And similarly, Britannia actually closed higher yesterday when the whole market was in a topsy-turvy. And just quickly, suppose we start an intermediate downtrend again. Reliance, Hind Unilever are outperforming stocks. They will fall less. So we should not go and short them, but they will fall.
So the SGX Nifty has been telling us that it could be at least a positive start. Let's see if that works out or not. But right now, it is time to get cues from the commodities universe. Manisha Gupta joining in with all the action. Good morning, Manisha.
Morning, Surbhi. Thank you so much for that. Well, after 3 days of gains, the crude oil prices have started Asia with nearly 0.5% of a decline. And that is because the markets are anticipating that you will see a rise in the US weekly inventories. So that has pulled the prices down. But everything else really seems to be supporting because the demand estimates have been on the higher side. The monthly reports that have come in from OPEC and IEA yesterday, both of them projecting higher demand, higher prices in 2018. And you also have the risks on upside because of the Iran sanctions, Venezuela issue. So as of now, markets holding steady at 51 for US and 56 for the Brent crude oil prices also. It is a good start for the metal space as well when you have the gold prices inching back towards 1300. The Fed minutes are seen as dovish, and the markets, while have factored in a Fed rate hike, the latest data actually in sense of inflation hasn't been so positive. Ditto the number with the non-farm payroll. So that really seems to be supporting the prices right now. In the metal space as well, the China demand potential is something that has been supportive. So you have the, not to do with the ferrous metals where you have seen the iron ore and the steel prices actually trading very flat. It really has to do with zinc, lead and nickel. These 3 metals have started Asia yet again nearly 1% on the higher side.
Okay, Manisha, we will of course keep coming back to you. You're 3 days at the Sera week where she's been speaking with all the best and the brightest in the oil and gas space. Key takeaways from the Sera week will also come from Manisha later on in the show. For the moment, of course, we are concentrating on the pre-market cues. We're taking a quick break, coming back with the pre-market rates and more opinion.